Alright, so tonight's session we are going to be talking about candlestick formations, and you would have already received the material for this week's session that you were supposed to go over basically and read everything to catch up. So if you haven't, make sure that you read it. A lot of this stuff will make sense or a bit more sense now. And if you didn't understand something, that's what these sessions are for. You'd be able to ask questions as we go along. All right, so the first thing that we are going to look at is a basic chart. So I have in front of me here the most recent chart for gold. This is on the 4-hour time frame, so it could be on any. For right now, we're not really dealing with time frames. We are dealing with concepts, but it could be on any time frame. What I need you to understand is the price on the chart, right, on the right hand side here, this axis here on the right side represents price, and the axis on the bottom represents time. So what does that mean? If we open a chart on the daily time frame, it simply means that each candle shows what the market did for a day. That's how the candlesticks work. So if I have the market, in this example here, this green candle here, the market opened down here, pushed all the way up here, and by the end of the day, the period, the market closed here. That means that this is a bullish candle. That's why it's green. Bullish represents the market going up or pushing bullish. That's the term that we use. And if the market opened here, this particular candle, and fell here, whether the candle is bigger or smaller, if you are on the same time frame, it represents the same movement. It just means that that day was a slow day where the market did not move as much. So if you watch this candle here, this red one here with this wick at the top, you could see that basically the market didn't do much for that day. We had a push up and came right back down. Didn't do much for that day. It doesn't mean that this is half a day or 3/4 day. It's still a full day. It just means that we did not do as much. And then the next day we had a push up. Next day we had a push up. And then this day here again, you could see we kind of went sideways, slightly bearish, sideways, not as much movement. We were bullish here, but again, not as much movement. And then we had another big day again. And that's how the market moves. The market will move in waves. It will never go just in one direction all the time. It will never just continue pushing bullish or bearish. So that's why as traders, we want to look for the areas that the market could change direction. So are we going to stop going bullish and go bearish? Or are we going to change from going bearish and start going bullish now? That's what we want to identify as traders to be able to find entries in this market. So in the Candlestick Bible, you would have referred to open and close. One concept, because I'm not going to go over the concepts like that in terms of very basic, but what I am going to do is, what I need you all to understand is this. Because of the wick formations and all of those things that you see, I want to make it very clear. Just give me a minute. Right, I want to make it very clear that this is how it works. So the market would basically be pushing bullish, and let's say we start here, the market starts here, you have the open price. And let's say during the period, if it's a 4-hour period, let's say within 4 hours we did this and the market pushed up like this, and then the market came back down here, and at the end of that 4-hour period, the market closed here. We have basically a low price, a open price, a closed price, but we also have a high price and a low price. So in this example, the low price and the open price was the same, and in this example we had a high price and a closed price. That is what will give us a candle that looks like this. So that's one of the concepts that I need you to understand from the candles. Again, just we'll do a couple examples and you'll get better with practice, but just to make sure that you understand. If we had the market starting here and the market fell like this and then came back up like this, this would be our open, this would be our close, this would be the high of the market at the top here, this would be the low of the market. So once we bring these lines across, we could see that the market left the whole body here, open price, close price was above, so that will become the body like this, and then all of this would be represented by a wick in the market. So that's That's what will form when we look at the market like this and we see, for instance, this candle right here. All right, this candle, basically based on where the last candle closed, this candle opened here, traveled down this way, came back up, traveled up here, and then closed at the top here. That's why this candle, if we draw the lines across like I was doing from before, that's why this candle looks like this, open and close for the body, and then where the candle was before for the wick. That's why this candle looks like this. So that's what you need to understand, that within the time period, whether this was a daily 15 minutes, 1 hour, wherever, whenever the candle closes, it tells you a story. So it tells you that the market traveled within this price point. We were bearish first, and then the market, before the end of the candle, the market had enough bullish momentum to take this all the way back up and then close bullish. All right, so that's one of the things I wanted to point out with the candlesticks and the open and close for y'all. Next thing that we will get into would be formations, because you would have seen again in the book, they would have touched on candlestick formations: morning stars, evening stars, bullish engulfing, shooting stars. Those are candlestick formations. Now you would see candlestick formations all the time throughout the market. Again, remember, as I said, the candlesticks are the language of the market. So each time a candle print, it tells you a story, or it should tell you a story as a trader, and that is what will determine or help determine your bias for the next candle, or for the next couple of days, or what the next move will be. That's what you're trying to find, and the candles help you do that. Now, candlestick formations paint a story. So basically, if we had the market in an uptrend just going up like this, the reality of it is we would never know, or it's going to be hard to know, where this area is going to form and where this area is going to form. Meaning, what stopped this market from pushing up when it was pushing up here and caused it to push down from this level here? And then when we were falling, what caused this market to just stop here, U-turn, and push up and go again? And even in this push up, why didn't this push up just continue to go straight up? What caused it here to reject and then reject, here to reject and then reject? That's what we are trying to determine. We're trying to find those areas based on what the market is currently doing. So in an uptrend, we basically going to have the market making higher highs and higher lows. Now the definition of that is when we have the market start at this price, push to a high price, then the market rejects and starts pushing down lower. When we come to an area, once we don't come back below this lower area, the market rejects and push again. We basically have a low, a high, a higher low, and then we pushed and we made a higher high. And this is the definition of an uptrend. In an uptrend, the market will continue making higher highs and higher lows, and it will never come back. So you see, this was the previous higher low that pushed the market up. When the market formed this one here, this low was still higher than this previous low, so this becomes a new higher low. And then we went up and take out this area here, making a higher high. This becomes a new higher high. And for that trend to continue, the market should reject. Yes, it should fall, but it should not take out or make a low lower than this price point or this level here. The market should reject somewhere within this space here and then continue to go up. That's the basic definition of an uptrend. And a downtrend will just be the reverse. So in a downtrend, we'd have the market falling down like this, we'd start with a high in a downtrend instead of starting with a low. We'd have a low, the market would push up without coming all the way back up to this level, and then reject and fall. So when we reject and fall here, this becomes a lower high. This area here becomes a lower low. We would correct and then fall, making a new lower high, and a new lower low. And once the market continues doing this, we would stay in a downtrend until we reverse and actually come up. And if this was your previous lower high here, this changes that for us. Because now, instead of respecting this high and rejecting somewhere within this space here to continue to fall, we made this was a lower low, but now we came up here and made a higher high. So this changes it and gets us into a new trend. So let's go to the charts and actually look at that. If we just look at these areas, I'm just zooming in on an area just for us to see. All right, if I'm looking at this area right here, follow along. These are the candles, but I'm going to use the line. Right, we had a push up, push down, push up, higher high, higher low, higher high, higher low, higher high, higher low. Even with all this move here, if you watch, the market never took out this level, right? Each time was what? A higher low that this market formed at these different areas. So this gives us the definition of an uptrend. So if this is where we were at and we see this here and the market formed a new higher low, this is a good area for us to look to buy this market. And as you can see, the market continued pushing up. And in a downtrend, it will be the opposite. And again, I'm just zooming into this area here. In a downtrend, you can see that we are making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So again, you could see we started really high. We had a low. We had a lower high here. We had a lower low. Pull back, made a lower high again, respecting the previous high. This is the previous high. You could see we never came back to that level. We then pushed down. This was the previous low, and we fell lower than that previous low, making us a new lower low. Similarly, if this is a new high, you could see we came up, did not make a higher high. We came close to it on this one, did not make a higher high, but we made a new lower high, which means we should expect this market to fall and take out this level here, and that's what the market did, giving us a new lower low. All right, so that's how it works until we start making higher highs and higher lows. Then we will change market direction. All right, so let me know if you have any questions. Please go ahead and type your questions in the chat, and I would go ahead and answer the question. As I said, this first session is to kind of get you accustomed to the charts, get you accustomed to understanding the markets. I'm going to share some tricks with you, and then if you have questions, I'll answer the questions. You'll get your homework, and then we'll get more in depth in next week's session. Yeah. All right, so in terms of the Candlestick Bible, it would have touched on a lot more, but we're going to take things step by step, make sure that you understand. So your homework assignment for this week is going to be, I want you to go to our chart. You all could use, for now, you all could use any software. You don't need to have a paid software. There are a lot of free software out there. You don't need to go and pay for a software right now. It's not necessary now. If you want to or you have it set up already, sure, no problem. But if not, again, we could do things in steps. You just want a software right now that you could pull up a chart. So for now, you could either go to smarttrader.com and you could get the free option there, which would be this software that I'm using here. Or you could go to TradingView and you could get their free option there as well. Now, you would be limited with some of the stuff, which is fine. As I said, at this level, we're only basically watching We're only basically looking for certain things that you don't need the advanced level version of the software as yet. All right, so what we want to do is we would have touched on candlestick formations in the book. I'm going to briefly just look at some here to show you the areas that we should be looking for these candlestick formations. And the reason why I'm doing this is you will see candlestick formations all the time. But if the market is in an uptrend moving like this and we have some rejection here, I want to look based on what I just shared with you all. If we're here, I am expecting this market from here to push up, making a higher high than this previous high because we are in an uptrend. Once we make that higher high, that's when I'm going to be expecting some sort of correction and then a continuation to continue the trend. So if that's the case, then I want to be looking for bullish candlestick formations in these areas here, because I'm expecting or looking for the market to reject and U-turn at these levels and push up, reject and U-turn at this level and push up. And if that's the case, then that's where I want to be looking for bullish candlestick formations. It does not mean that a bullish candlestick formation mightn't form somewhere here, but if it does form there, that's where you as the trader now need to understand, what do I do? Do I take this one or do I not take this one if it forms here? And the reality of it is you won't look to trade a bullish candlestick formation at an area like this for no reason, not by itself. It'll be better to wait for the market to reject and then continue going. So if we go to the charts, you could see, and again, if I identify, let's look at some of the low levels, right? If we're saying here, let's just look at this. We had a push here, a correction, a push here, a correction. We did have some sideways movement here, but again, as long as we did not take out this previous low, the market then went up, giving us a higher high by taking out this high here. So if that's the case, then I want to be looking for bullish formations at the bottom here, 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 and here. Because that's where now when I buy, it will drive or push the market up, which would allow me to generate money. And if we zoom into those areas, we could see we had a nice bullish engulfing candle here that started the move. Here we had a nice morning star here that started this move. We had a nice bullish engulfing here again that gave us a push, but then we had some sideways and then the continuation. And similarly here, we had a nice morning star pattern again. So that's why you want to learn the language, because if we were looking at this chart at that level and the market basically gave us this pattern here, this could have been a good area for us to buy, and then we would have allowed the market to go up, making us a higher high. Similarly, when the market is pushing down, we'd be looking for bearish formations. So within this move right here, again, let's do the line chart first. We could see that the market basically pushed down, corrected, push down, corrected, push down, corrected, push down, corrected, down, corrected, down, like this. And again, if that's the case and I'm looking to sell this market, I want to sell at the levels that formed. So if these are the lower lows, what confirmation or what did the market tell me? Being that this is the language of the market, what about this said it's time to sell the market? And as you can see here, when the market pushed up here, we had a nice bearish engulfing candle formed here, which engulfed 2 candles, and then the market fell. When the market came up here, we had a nice rejection. I won't quite say this one was a evening star to push the market down, but it was followed up right here by a nice bearish engulfing. So even if you didn't get in on this first entry here, because we know our target is for this market to fall all the way down to score this point, then even if we miss this here because we didn't have a candlestick formation, it was followed up by this bullish engulfing here and this bullish engulfing here. So sorry, bearish engulfing, not bullish. Bullish would be the market going up. So we would have sold here, and we would have had a target down here, which the market fell down and fulfilled. So that's why understanding the language of the market or candlestick formations is very important. Understanding how the market moves is also very important because, as I said, for instance, look at this here. Let me go back to this example here. If we're saying that this market was going down, the market formed a bullish candlestick formation right here. This is a bullish engulfing. We have a shooting star here because of the wick. So if the market formed this here, then shouldn't the market go up from here? But we're in a downtrend. So understanding what the market is saying, but also understanding where the market currently is would help you not fall into traps. So it's not that you're trying to buy or sell every candlestick formation. It's about you understanding what the markets are saying, and when they could align now with proper areas that you're looking at, that's when you are going to have a better trade or a better setup. All right. So for homework for tonight, what I want you to do is, as I said, you don't need to have a paid software. If you don't have a software, let me know and I will recommend one to you. Send me an email and I will recommend it to you. And what I want you all to do is go through the charts, and I want you all to identify 2 things. An area that we're in an uptrend or downtrend. So you're going to do 4 different charts. I need you to do 2 charts for bullish, 2 charts for bearish. So meaning I want 2 charts in an uptrend. Again, doesn't have to be the entire chart for you to zoom out. If you zoom in like this, let's say this is what we're seeing in front of us here. To understand the concept, you can show me this area of the chart as a downtrend, and you would identify the market making the lower lows and lower highs and label them. So you would come and you would say we started here with this high, we made a low, we now have a lower high, a lower low, and you would come all the way down labeling them. And in that movement, when you go to the levels here, I want you to also identify the candlestick formations that you see forming at that level. So I want you to come and you would then say, you know what, at this level here, I'm seeing a shooting star. And that started the move, which caused this market to fall down. So it's 2 things you're looking for on each chart. You're looking for the direction, so I want you to show me a trend, higher highs, higher lows, and then I want you to show me the bullish or bearish candlestick formations that formed, but in the proper areas. All right. Do you have any questions? If you all have any questions, please go ahead and type in the question in the chat box and I will go ahead and answer them. If not, for now, that's fine. If you all have questions, you all can always email me the questions and I will get the answers to you. Now remember, homework is due by Sunday, please God, so that I have enough time to go over it. Sometimes you all will have corrections to do, and I would be able to go over the corrections and then share it with you so that you could basically make your corrections and send them back to me before we have the next session, which we will cover another topic on. Alright guys, so that's it for tonight's session. I'm not seeing any questions. So that's it for the session for tonight. I would see you all on next week Thursday, please God, for another live session. But we will be communicating, as I said, with the homework. The video recording of this session would be posted on YouTube, and you all will get the link. Alright, as I said, it usually takes about 48 hours for everything to be done. So within 48 hours, if today is Thursday, we're talking about Friday, Saturday. So by Saturday night, Sunday morning, you all would have access to the recording where you all could review, and then we could go again to plan for the following week, guys. So that's it for the session. Have a good night, guys.